Okay, good morning everybody. Mike Niemiec here, middle of the week. It's Wednesday, December 11th. We're past the USDA report. Really much in the way of fanfare in the report. The USDA kind of left the corn carryout unchanged at 1.9 billion bushels. The trade was looking for a little bit of a smaller number. So that was a non-bullish event. The beans also stayed unchanged at 475 million bushels from a month ago. So that too was somewhat of a non-bullish event as far as the flash goes. But they did come down a little bit with the wheat, roughly at around 975 million bushels versus the 1.0 billion that they had roughly a month ago. They also saw a rise in the corn carryout in the world from 296 on up to 300 million tons. A little bit of a rise in the beans from 95 to 96, and also a little bit of a rise in the wheat from 289 to 289. So once again, the report itself was non-bullish and kind of static, and we kind of stay somewhat in our trading ranges that we've been describing. We'll see what happens in the January report. That's the more important report for the whole year when we come out with the final production numbers, winter wheat plantings, and quarterly stocks. Other than that, I'd have to say that we saw some soy meal registrations last night. 500 contracts came out from Bunge, so be a little bit aware of that. The player sheet yesterday with the report showed that the trade was a buyer of 3,000 contracts of soft-red winter wheat, 3,000 corn, 4,000 beans, but they bought 4,000 soybean oil and sold 1,000 soybean meal. So once again, that's going to be the cutoff date for the next commitment of traders report that comes out on Friday. And as of yesterday's close with the USDA report, we got them long in the neighborhood of around 18,000 contracts of soft-red winter wheat, short 105,000 contracts of corn, short 64,000 beans, short 46,000 meal, and now net long 83,000 contracts of soybean oil. The Malaysian palm oil market now is starting to slip a little bit, and that's probably been a little bit of a precursor for our soybean oil, so be a little bit wary of that as far as maybe potentially being a little bit overbought in the soybean oil. Other than that, now we're going to go on to two things with USDA past us right now. One of it's going to be South American weather. The weather's still the same. Brazil looks to be somewhat conducive. And the Argentinian weather, maybe you're getting a little bit of a pickup of a concern there as far as being dry, mainly in the southern parts, so be a little bit aware of that. And then obviously we also have the politics going forward in here as far as trade talks go between the U.S., Canada, Mexico, and Europe. So all in all, still kind of think that we're still in our trading ranges, haven't changed from that opinion here as of yet. But obviously, if the politics and South America goes okay, the trade's not going to really have much gumption to go and try and get much higher than the top end of the trading ranges. And we still have it at 880 to 970 in the March beans, 365 to 410 in the March corn, 525 to roughly $5 to roughly $5.40 in the May wheat. So once again, these are my opinions, not that of ADM or ADMIS. I thank you.